Amazon shares spiking after hours. The secret behind Jeff Bezos' surprise profit. Shares up 17%. I'm Emily Chang. This is Bloomberg West. Coming up, Pandora shares also rallying after hours. The company optimistic about its next quarter, but total listening hours are flat. Plus, AT&T looks for a way to drive growth. We'll ask the former FCC chairman Bob McDowell if the company should be allowed to buy DirecTV. And YouTube would have been crushed without Google. I bring you highlights from my Studio 1.0 interview with YouTube co-founder Chad Hurley. All of that ahead on Bloomberg West. First, though, we are talking about Amazon, out with a much better than estimated quarterly report. Shares surging, revenue jumping 20% to $23.2 billion. And the company turned a surprise $92 million profit, 19 cents a share. Analysts expected a loss of 14 cents a share. Amazon's second quarter sales also got a lift from its fast-growing cloud computing business and efforts to lure more customers with online video, plus faster delivery of Amazon goods. Right now, Amazon shares are up again 17%. With us now from New York, Tuna Amobi, S&P senior equity analyst who covers Amazon, David Fannon, executive vice president of Screen Media Ventures, and via Skype from Seattle, Matt McIlwain, managing director at Madrona Venture Group, and early Amazon investor. First, I want to start with you, Matt. Let's talk about what's happening with AWS.
Well, AWS is just rocketing. They're up 80% year over year. And they're one of the most profitable, if not the most profitable segment of Amazon. They're now 8% of the overall corporate revenues, as you saw in the $23 billion for the quarter. And they're just building up the stack and making a ton of progress.
Now, David, I want to bring you in on some of the things we're seeing about online video. Talk to me about, Transparent was a big hit. Are we seeing that replicated?
Yes, we are. I mean, what Amazon's done on the video side with their Amazon Prime, I wish their quarterly report would show the numbers of how many subscribers are subscribing to Prime and what they're doing with Prime. But the free shipping has really, I think, enhanced the Prime service to consumers. And I, as a film distribution company, we sell to Amazon and we do very well with all of our products on Amazon. They're promoted properly and they're doing a really good job. And they don't get the attention they deserve as Netflix steals all the headlines with the SVOD services. But Amazon, I'd be interested to see what their numbers are. Netflix is at 50 million subscribers. I wouldn't be surprised if Amazon Prime is at that number or above that number.
Okay, let's talk about this surprise profit, Matt. How surprised are you? Look, it's not that big given they're bringing in $23 billion in revenue, but still, it's a profit.
Well, they were up to $1.8 billion in revenues on AWS, and that had 17% profit margins last quarter. So if you just take that kind of $800 million gross with that heavy profit, that counts for your profitability right there. And I think there's other newer investment areas building on what David said, like their Twitch investment, which I understand has been very successful for them. And so there's a lot of these second order profitability engines, Amazon Web Services now being broken out, but others under the covers that I think are having a big impact to the positive for Amazon.
Let's talk about that. Amazon, Jeff Bezos has said, is the first company to use a Golden Globe, speaking about Transparent, to sell toilet paper. What, David, are Amazon's real ambitions here?
Again, I love the analogy to toilet paper, but I think their ambitions are to be everything to every consumer. They want to be one-stop shopping for all consumers, from toilet paper to movies to games. Amazon Prime, Amazon Fire, the TV service, which is competing with Roku, Xbox, PlayStation now, is a real major player in that space. And Prime is giving a real run of the money to Hulu and Netflix and winning that Golden Globe. It doesn't get enough attention as what Netflix does. But I think Amazon really is a serious player in this space.
Let's talk about Prime. Tuna, what do we know and what do we not know? Because we still don't know a lot of information about just how many Prime customers there are, aside from me.
That's exactly right. But we estimate that Prime has crossed 50 million members. I think more importantly, I think the economics of a Prime customer is superior to a regular customer. That's why you see them investing aggressively in Prime, whether it's kind of Prime Day, content, etc. And that momentum continues. And I have to say also that this quarter that they just reported is the best quarter we've seen in a while. They outperformed both on the top line and bottom line. I was just kind of parsing the numbers, and it's kind of hard for me to kind of, frankly, see any negative in there. The highlight has to be Amazon Web Services. I think that division is on track to hit $10 billion in revenue faster than we thought. The margins crossed 20% for the first time. So I think, really, I think it's remarkable what they've done in this quarter.
Now, Prime customers are now getting cash back, potentially, depending on how much they spend. They're getting cash back from Amazon in the form of credit. Yet at the same time, retailers online and offline are stepping up their game. I just spoke to Jet.com, this new company that's trying to drive down prices as much as possible so that they're the lowest price option out there. It certainly seems like Amazon versus everyone else. How big a threat is everyone else, Tuna?
I have to tell you that, the landscape has gotten a lot more competitive. Whether you look at the traditional retail landscape, witness what Walmart and Target did when Amazon announced their Prime Day. If you look at the content side, it's the same story, Netflix, Hulu, everybody's stepping up their game. And I think Amazon, to be sure, has really, taken it to the next level. So when you look at the business as a whole and all of the underlying innovation that's going on to drive, the Prime business, I think it's really coming together.
All right, Tuna Amobi, S&P Senior Equity Analyst, joining us from New York. David Fannon of Screen Media Ventures, Matt McIlwain of Madrona Venture Group. Amazon shares still up about 17% after hours. We'll continue to follow the headlines. Thanks, guys. Well, Google famously bought YouTube back in 2006 for $1.6 billion. A steal in retrospect, but looking back, co-founder Chad Hurley says he doesn't regret holding out for more. In fact, he said if not for the deal, YouTube would have died. Take a listen.
We were lucky enough to kind of be acquired by Google, who, in my mind, kind of took a chance on us. And that really, YouTube probably wouldn't be here today or what it is today without their support.
Since leaving YouTube, Chad Hurley went on to start another company called Mixbit, a mobile video platform that landed him in some legal trouble with Kanye West and Kim Kardashian. I asked him to explain his side of the story.
I took some video and I didn't post it until the next day after I saw quite a few other people had posted photos and videos on Instagram. So I didn't think it was a big deal. I asked my friend, and he didn't seem to mind. But after it got out there and got a little of attention, then Kim and Kanye wrote me an email. So the rest is history.
Well, they sued you.
Yes.
So what happened? What was the result of that?
Well, they're still suing me. We'll wait to see what happens when this actually airs, but it's been an ongoing process.
Video of Kim Ye's engagement. He posted it on Mixbit. For more on my conversation with YouTube co-founder Chad Hurley, be sure to catch Studio 1.0 tonight, 7:30 Eastern and Pacific. Coming up, Pandora shares rallying after the company says Apple Music, no big deal. Details next. Plus, 10 scientists from Missoula, Montana pocket $2 million in the latest XPrize challenge. Their research is next. Some breaking news. Airbnb is close to hiring Blackstone's Lawrence Tosi as chief financial officer. This according to people with knowledge of the matter. Airbnb hasn't had a CFO since Andrew Swain left the company last year. Tosi, 47 years old, has been CFO of Blackstone since 2008. Last month, Airbnb was in talks to raise another round of financing at a $24 billion valuation. The company is projecting revenue of $900 million this year, up from $250 million in 2013. Representatives for Airbnb and Blackstone declined to comment. I want to get to Pandora now, also reporting shrugging off the threat of Apple Music, and investors celebrate. The stock up after hours after the company said it doesn't expect much of an impact from new competition. Joining me now for more on the impact of these results, Macquarie analyst Amy Yong in New York, plus Capital founder Adam Lilling in LA. Amy, I want to start with you. First of all, some of the highlights, raising their forecast, but active listeners 79.4 million and listening hours flat. What are the highlights to you?
I think the big story this quarter is really monetization and the fact that RPMs grew really nicely and actually beat our estimates. They actually ended up taking the lower end of their full year guidance. So I think the key story here is monetization and closing that gap to traditional radio broadcasting.
Obviously, we saw the reveal of Apple Music. We recently sat down with Pandora founder Tim Westergren to talk about how big a threat he thinks it is. Take a listen.
There's a lot of novelty in this space, so features and things that seem really interesting and compelling, but actually don't become habitual products for folks. And we tend to shed those things in a hurry and focus on things that really people use a lot of. And ultimately, it's about simplicity. You know, people want to hit a button and hear stuff they love with not too much fuss.
So the founder of Pandora doesn't think Apple Music is a big deal. Adam Lilling, what do you think? Is it a threat to Pandora? Is it a threat to Spotify?
Well, you know, it's funny. Tim just said the word product. I mean, Pandora is an amazing product. And the big difference here is all the other services have much bigger revenue streams than a Pandora per user. I mean, they did a great job on revenue this quarter, but they went from about $11.50 per average revenue per user, and maybe it's trending to 14 or 15, where Spotify gets 120. So there's, you know, Pandora had a moment a few years ago where they were the only one on all these devices. And now you have Spotify, you have all these other services that are now getting on deck. And they're kind of in a box because they did this pure play settlement that makes them only be a radio station. And, you know, this ends at the end of 2015. So I think the major bet is, where do they go from here? Do they go beyond just being a radio station or radio service?
Pandora also talks about, you know, how its users are loyal users. And Amy, I wonder, you know, they've been ramping up their sales team, but they're also spending a lot to get that sales team built out to increase ad revenue. What about the concerns that Adam is talking about?
Yeah, I think Adam makes a really good point, which is why, you know, EBITDA actually came in a little bit shy versus our estimates. But I think, again, the key story for 2Q at least is really revenue and monetization of their user group. It's unclear, though, how that's going to trend in 2016 and 2020 ahead of the royalty fees that are coming up for the next 4 years.
So, Adam, how do you see this play out? Like, let's say a year, 2 years from now, how does Apple Music, Spotify, and Pandora evolve? Who are, like, the big three?
You know, you got to include Amazon in there, too. My kids, we just got the Amazon Echo, and they keep talking to Alexa every day, asking her to play music, and it just starts playing music. So there's some, you know, Google's, you know, bought Songza, and they're trying to go big. I think the big issue here is kind of, what does it tie back to? Apple has devices, Amazon has huge membership. If you look at Spotify and Pandora, I mean, Spotify is about 75 million users, Pandora is at 80 million users, but Spotify's got this, you know, multiple billion-dollar valuation higher than Pandora. I think where it goes is kind of, again, back to what Tim says, I think Pandora is a product, but I think music is part of media, and it's what's the entire bundle that you're going to get. I know we're in this process of unbundling, but music is not, you know, absent of television. You got Spotify trying to do video streaming. Verizon's coming into the market. I think it's going to be who delivers the music and how easy is it to get it.
All right, Adam Lilling, plus Capital founder Amy Yong of Macquarie. Obviously, a lot of things at play here in the streaming music space, thanks to both. Pandora shares up almost 7% now in after-hours trading. Well, this week, scientists from Sunburst Sensors won $1.5 million through the Wendy Schmidt Ocean Health XPrize Challenge. We sat down with Schmidt and XPrize CEO Peter Diamandis.
At the XPrize Foundation, we look for some of the world's biggest problems that are not being solved, where there's a market failure of some type. And we put out a large cash prize, in this case funded by our benefactor, Wendy Schmidt.
My husband Eric and I, when we do any philanthropy, we are looking for transformational change, really changing the system that either wasn't well understood when it was developed or we know could be better, and we can use data to do that. The problem we're attacking this time is an invisible problem of ocean acidification, and the whole system starts to change in ways that could affect all of us on land, since we get half of our oxygen, more than half our oxygen, from the oceans. I invited 25 marine scientists from around the country to join us in Washington with the XPrize team and talk about what do you need, what device would you need to help you to measure this phenomenon that nobody can see.
Teams had actually only about a year's time to develop devices that could very affordably measure ocean pH, because before the cheapest device was like $15,000, and then also very accurately at deep ocean depths at 3,000 meters down, 10,000 feet down, or in the coastlines, measure what's going on. Because if you can't measure it, you can't take action about it. Sunburst Sensors
is headquartered in Missoula, Montana. And they love to say, we don't have an ocean there, but we're ocean scientists, and we're building ocean monitors. They were high school friends, a husband and a wife and another friend, and they were a very small business, and they had existing technology, as people tend to do when they come into these prizes sometimes. And the incentive of the prize itself takes it off the drawing table and brings it into reality.
We're living in a time where entrepreneurs have access to the world's information on Google, access to AI, robotics, cloud printing, incredible technologies that only governments and large corporations had just 20 years ago. It's about finding the non-expert who comes up with this novel idea, like, why can't we do it this way, that true breakthroughs really come from.
There are economic consequences to all of this, and so these tools are going to be in the hands of lots of people on ocean-going vessels, on shores, and in the hands of citizen scientists. All of the teams that participated from the very beginning have given us learning, and the door is wide open for all of those teams to develop their product in a growing market.
Wendy Schmidt and Peter Diamandis there of the XPrize. Coming up, AT&T beats and T-Mobile's fight for airwaves. We bring you the latest. Plus, NASA may have discovered Earth 2.0. We learn more about a distant planet that is a lot like our own. Next. Time now for our daily bite, one number that tells a whole lot. And today's bite is 1,400. That is the number of light years between Earth and a newly discovered planet that could be our close cousin. NASA announced its Kepler Space Telescope spotted the planet today. It's more than 1.5 times as big in radius as Earth, and it circles a sun-like star for 385 days, just a little longer than our year. The planet is also located in the star's Goldilocks zone, a potentially habitable region where water can exist on the surface of a planet. NASA's next task is to determine the mass of the planet to see if it's rocky, meaning it could have active volcanoes and an atmosphere similar to Earth's. This discovery is one of 500 planets captured by the telescope. All right, let's get back to earnings. AT&T just reported a few minutes ago, the second largest U.S. wireless carrier, adding 2.1 million net adds this quarter. Operating revenue in line with expectations at $33 billion. I want to bring in Jonathan Chaplin of New Street Research and former FCC Chairman Robert McDowell to discuss. Jonathan, I'll start with you. Give it to me, the good, the bad, and the ugly at AT&T. This is a company that's been struggling to drive growth.
So results overall were better than expected. I'm fairly impressed by the headline numbers. They beat on EPS. They beat on EBITDA. They beat by a little bit on revenue as well. If you look at the underlying trends, I still think there are reasons to be concerned here. The core of their value lies in the wireless business, and they're still losing customers in wireless. They reported 1 million net adds, as you mentioned, but most of those are tablets that are being sold into their existing customer base. The total number of customers is declining as they lose share to Verizon and T-Mobile predominantly.
Right. Let's talk about T-Mobile because, John Legere, the CEO, has made it his job to ruin AT&T. How big a threat is T-Mobile? Is John Legere getting it done?
He's done a phenomenal job over the course of the last 2 years. They've taken a tremendous amount of share. AT&T and Verizon over the course of the last 2 years have ceded a fair amount of share to him. And he started with a big disadvantage, with a worse network, a damaged brand. So it's been a pretty spectacular turnaround. Over the long term, he absolutely is a real threat to AT&T and Verizon if he can get his hands on more spectrum. So the talks that they're in.
Let's talk about spectrum. I want to bring in Robert on this spectrum issue because the FCC is about to reject a request for more spectrum to be reserved for smaller carriers. Robert, how does that affect a T-Mobile versus an AT&T?
Well, first of all, I think the FCC is going to set aside maybe 30 megahertz of spectrum, which is quite a bit. And if Sprint is not going to participate in this upcoming auction next year, and we don't know if that's for sure or not, but that could be good news for T-Mobile, regardless of whether they want more spectrum or not. So that spectrum that AT&T and Verizon can't bid on, just T-Mobile and smaller carriers. So that could be very good news for them. T-Mobile is very spectrally efficient. They bought Metro PCS. They did a fantastic job of integrating that network. They have some fantastic engineers there, so they're not to be underestimated. They certainly are a threat to all of the carriers, and it's a very competitive marketplace. It's a great time to be a wireless consumer.
Also, potentially good news, FCC Chairman Tom Wheeler signaling yesterday that the deal with DirecTV should go through. What does that mean for AT&T?
That's a shot in the arm for AT&T. Nothing else. It's good news for them. It's good news for video subscribers. I think the FCC probably feels as if that deal provides a nationwide footprint for a stronger national competitor against Comcast or Time Warner Cable and others. So it's good for competition, I think the FCC is probably thinking.
Let's talk about Comcast. Comcast getting a huge boost from some new films out, Jurassic World, Furious 7. Jonathan, are we going to see the film side of the business getting more attention going forward?
So the film side of the business was spectacular this quarter. They blew away everybody's expectations, reported phenomenal growth year over year in filmed entertainment. Unfortunately, the cable side of the business was a little ho-hum. And that's the piece where we tend to focus on most. The cable side of the business did fine. They're continuing to take share in broadband. Their video business is continuing to improve. But they didn't beat by nearly the magnitude that they did in filmed entertainment.
Comcast now has more broadband subscribers than cable viewers. All right. Jonathan Chaplin, New Street research analyst, Robert McDowell, former FCC commissioner, now Wiley Rein partner. Thank you to both of you for breaking it down for us. And that does it for this edition of Bloomberg West. Be sure to catch the latest episode of Studio 1.0 tonight. My conversation with YouTube co-founder Chad Hurley.